Time for today's three-stock lunch. Here with our trades is Eva Ados, ER Shares COO and Chief Investment Strategist. First up, Eva, we got Tesla on track for its 10th consecutive up day, 45% gain over that time. It's a question a lot of our viewers ask, what do you do when you have a big winner? Though this one, I mean, it's up a lot in the last month, but you may not be a winner in this stock if you've held it for longer, for a year or two.
Yeah, definitely. So we have it as a hold. And as you said, initially the company was down early in this year, but now they went up 40% in the last 10 days. We're tracking their short interest, and it's highly, almost perfectly negatively correlated with the stock appreciation, which means that the shorts have been covering, and that's partly a short squeeze too. So this is a company that's been controversial for many reasons. One was Elon's compensation package, which was at $50 billion that has been settled. Now there's a lot of discussion about the relative valuation of the company. Now that's an $800 billion company, which is more than most of the competitors combined. And their forward price to earnings ratio is 91 compared to 5 for the rest of the category. That means there are a lot of negatives and positives for the company. So we would hold at this point.
All righty. Thanks, Eva.
Holding it. Let's move on to Lennar, which got an upgrade from Wedbush to neutral from underperform today after the stock passed its price target. Homebuilders have had some headwinds the past month, as you can see on that chart there. Eva, what would you do with Lennar here?
Best case scenario, hold. As you said, home builders are not having their best year, and unfortunately, we don't think things will change anytime soon. The macroeconomics do not favor home builders when it comes to first-time buyers. They can't really afford to buy a new home. And when it comes to current homeowners, they're reluctant to give up their 3% mortgage rate that they secured during COVID. Inflation is at 3 to 4% annually. Mortgage rates have been sticky. And so unless we see the Fed cutting rates, home builders are not going to be the best category to be in. So we would hold only in case someone already owns it, and that's a bet that the Fed will at some point cut rates. Otherwise, this is not a good category to be in.
I think you started to answer my question, Eva, and that was what a hold means. A hold to you means if you own it, don't sell it, but if you don't own it, don't buy it. Is that basically it?
Exactly.
Okay.
That's exactly it.
Okay,
yeah.
Good. I got it right. Wow, cool. All right, finally, finally, a stock impacted from the weak consumer. Shares of Helen of Troy headed for its biggest one-day plunge since going public 52 years. Who knew Helen was that old?
Wow.
52 years ago. Your trade here, Eva.
52 years, but it's a sell. Their first quarter was really bad. The forward outlook is even worse. Now we're speaking about a company where their profits and margins have dropped by 1/3. And what has not been discussed a lot by analysts is that when you have a combination of sales dropping, inventory rising, and margins coming down, when it comes to a retailer, that's a really, really, really red flag. And so their SG&A has soared. Their long-term debt has increased. We're not saying that they're about to go bankrupt, but this is definitely a company that has to be monitored for bankruptcy risk. It's a sell.
Well, that would be a go to Helen of Troy. Eva Ados, thank you.